hey, owning things that you have governments fighting over and printing fake fiat money to buy is a wonderful place to be.
Silver is no longer just a poor cousin of gold. It is now caught between industrial demand, investor demand, and a growing push to treat physical metal as a strategic reserve. Now, Hyperscale Data has partnered with Scottsdale Mint to add silver, gold, platinum, palladium, and rare earths alongside its Bitcoin holdings, a move its backers say could mark a shift in corporate treasury thinking. Well, Josh Phair is the founder and CEO of Scottsdale Mint. He joins us on Top of Mind today. Josh, it's a pleasure. Thanks very much indeed for talking to us.
Yeah, thanks for having me on today.
Well, look, a lot of content to speak about, whether we're looking at insights or that partnership, but perhaps I just want to raise the curtain here. When you look at the metals market right now, what genuinely excites you or surprises you the most, and what are you watching most closely at the moment, Josh?
Pretty much what both central banks are doing with gold, and then what the governments are actually doing with all the metals, including silver as well, which the U.S. has made a critical mineral. And then I would say the reallocation of where the mining feedstock is going around the world is a lesser covered thing right now in terms of where does the doré or where does the concentrate, what nations are they going to? And as banks are kind of taking over a different role of mercantile banking now, representing nation states, I think there's a lot more happening, and it's causing issues with supply in various markets such as China, where they're not maybe getting as much of the feedstock, and then they're in turn having to do export restrictions on certain minerals, whereas the United States is suddenly getting a little bit more metal, and through banking relationships and obviously just historical changes that we've seen in this Trump administration. So that's where I'm kind of keeping an eye on, and because everything has changed. Essentially the moment Trump took office, import export of gold, and we've seen a lot of wild changes in the marketplace.
Yeah, and it's against that backdrop. I want to bring in this decision to partner with the Hyperscale Data, right? What made Scottsdale Mint step into this, and what does this deal allow you to do that you couldn't do before, Josh?
Well, yeah, to be clear, so Hyperscale is a publicly traded company. They're a growing company. They're raising capital. They're backed by a guy named Todd Ault, A-U-L-T. If you were to look him up, I don't know specifics. I'd say he's a very well-heeled gentleman in the blockchain space, and in particular, I believe Bitcoin, and is incredibly plugged in. I was reached out. Their company was looking. Obviously, they have. I believe they announced a $100 million Bitcoin strategy, of which I think they've already filled about half of that, around 50 million in Bitcoin. And then they have a very large, I believe it's a 600,000 square foot data mining data center in Michigan. And I was reached out to, and they did some due diligence and flew around the country, visited vaults, suppliers. And they've laid out a vision, and again, I'm not making a recommendation as to their stock, just, hey, what my company, Scottsdale Mint, is doing. And they said, hey, we want to start buying and going long physical metal, starting with silver. So I can just, they've announced a few other minerals as well. Starting with silver, they'd like to, and I think they announced to the marketplace 100,000 ounces is where I think they were talking about, just kind of where they want to start. I could see if you kind of look at what they're doing with Bitcoin, you could perhaps say, hey, they want at least 100 million of silver. What are they going to do with other minerals? It's to be determined. But what's kind of different about this is a lot of times we see public companies or someone that is in the blockchain space, they may provide something on the blockchain, but they're just doing an API feed with a bank or with a metal provider, and they're not actually going long the metal. What they're actually doing is saying, hey, we're going to war chest hard assets along with some of our digital assets that we think is going to do well. They've also announced they've partnered with some robotics companies out of Korea, looking to bring jobs to the United States for testing, training. And so it's kind of an interesting thing. If you start thinking about AI in robotics, we know that they need a lot of various minerals. So they need metals. And so it's kind of interesting. Are they almost, and I don't want to speak on behalf of them, but they know probably where the industrial side of demand is going to go. They're also looking at it as a monetary instrument on their balance sheet. This is no different. We could talk, if you're a clothing company and you think cotton costs are going to go up over the next number of years, you may load up on your supply contracts. We've seen Samsung do this in the, buying interest out of silver mines. So this is definitely pretty interesting to see where this, kind of builds. But I think they're just looking to war chest material that they're probably going to utilize and plug in. You could imagine probably something to do with the industries that they're in.
Now look, should investors see this as a one-off partnership? Josh, or are you already in discussions with other companies looking to build similar physical metal reserves?
Yeah, so what we're seeing, Devin, is you're seeing people that weren't really interested in metals. Yeah. They're looking to buy it at the right place and store it at the right place so that they have liquidity. And what I mean by that is, so we work with a host of banks. I think right now we have 4 banks that can loan against metal that's being held in our vault. So if someone wants really favorable terms, they need quick access to cash, and let's say they've got 10 million in gold or a pot of it, they're able to tap some of that on site. Our facility is physically audited every quarter by third parties. It's a really nice thing. So I think what we're seeing is companies are obviously Michael Saylor, what he's done with strategy, kind of transform the place. He's a little different where he's taking on exorbitant amount of debt to go buy one asset. But I think, if you look at publicly traded companies, I think there's like close to 100 or so that's actually holding Bitcoin on their balance sheets where this didn't exist before. So if we kind of look back at Tesla, even when they, most of us remember when they added Bitcoin to their balance sheets, well, they actually amended the SEC filings to also hold gold bullion. And so while I don't believe they've purchased it yet, we've also seen companies like Palantir own physical metal, not an ETF, not a paper product, but physical bullion. I believe they did sell it probably too early before it ran. But I think there's no doubt that companies are looking at saying, hey, I've got this bucket of treasury assets. And traditionally, it's probably just been US dollars. But if you're doing international trade, you're in euros, you're in yen, you're in the Canadian dollar. And at the end of the day, you have to manage your flow of capital. And then if you're a company that's in physical asset, you manage your inventory. So if you're in I would say clothing is typically depreciation, but maybe cotton or a contract is appreciating. So people, I think, are just looking at their balance sheets in a different way. I see this as a trend. I don't see this as a one-off at all. And I think the amount of companies that we're involved with, and I think also because I'm in Wyoming is the #1 most regulatory friendly for the blockchain space. So we're seeing this demand, kind of pick up. No one knows what the world's going to look like exactly in 5 years with AI, the changes. I mean, look at the global strife we're in. Who's going to be partnered with who? Who's going to be an enemy of who? Tariff changes are left and right. And I just think there's so much uncertainty. What an amazing time to own what I call a halo investment, which you probably have heard in the tech industry is hard assets, low obsolescence. So, if you own something that's not going to go away, that's a wonderful place to park your money.
We are heading into another reported supply deficit, right? I mean, is the real constraint now price or access to physical metal?
A little bit of both. I don't think it's so much price. And we saw extreme volatility, and I'm going to go with there was a really big run when too many people want metal at the same time, and it all kind of happened right around when the U.S. announced a critical mineral, and I think a lot of governments were scrambling for metal at the exact same time. You had some concerns in London of inventory levels being depleted. You even had some concerns in the U.S. And anytime someone wants to buy too much, that's going to disrupt an economy. We saw it with the Hunt brothers in the 80s with silver, George Soros in the early 90s, Warren Buffett himself in the late 90s with silver. They got a knock on the door from the Commodities Futures Trading Commission that says you can't hold that much as a speculator. So when you have governments who are buying it, let's say for their Tomahawk missiles or for deployment of their AI data centers to run the military of the future, those they're allowed to disrupt. And so whether that's Chinese, European or American, they're sourcing their metal. So there's no doubt that we've seen, I think, shift in, movement of metal from continent to continent, and that's always been there. The banks are always going to arbitrage, various premium opportunities to make money. But there's no doubt that, someone is hoarding metals, and to your to your statement, yes, silver's been running a deficit, in terms of what's being mined and what's being consumed each year. And so that's definitely a factor to watch.
I want to ask you that if the physical market is tight, why is price still largely set in paper markets, right? And why hasn't that fully translated into price discovery, Josh?
My hunch is because banks are financing everything from the mines to the refineries all the way out to the physical metal. So, most mining companies don't own their metal all the way through the the mine life. Once it leaves the mine site, oftentimes they're either locking in the metal price, maybe they've hedged some of it, maybe they're kind of doing a running market, but the bank is essentially doing a prepayment of usually around, let's say, 90%, and then once it's settled, whether that's 1 to 4 months later, they're finalizing it, the variance, and then they make that final payment, and the bank takes the cut, and then oftentimes the bank now gets to make the market for the physical metal. So you take someone like J.P. Morgan, everyone says, oh, they're evil. Sometimes they're shorting the marketplace, but they're actually brilliant because they own probably one of the largest supplies silver in the world, maybe, and they own the metal coming out of the mine. So a lot of times when we see these banks short the market, they might just be offsetting, what they already own, coming out of the ground or that's in process. So we don't get to see all that. We don't get to see the different exchanges. So I think the banks are such part of the DNA of mining, because miners need, as you well know, they need more cash to make payroll, to pay the drill rigs and keep going. So I think banks are so plugged in as the DNA into the system that they're the ones, doing a lot of the pricing mechanisms.
All right, so Josh, in a moment, I want to get your views around the futures market shorting. But before that, let's take a quick look at the mining.com minute. You're watching the mining.com minute. I'm Devin Murrigan. China is tightening its grip on one of the world's most critical resources, rare earths. Beijing wants far stricter control over who produces them, how much they produce, and what happens if they step out of line. Under new draft rules, companies that break production quotas could be hit with fines worth up to 5 times their profits, and in serious cases lose their licenses entirely. Some could even see their equipment and products seized. Now this matters because China already dominates the market, producing more than 2/3 of the world's rare earths and controlling most of the refining. These minerals power everything from smartphones to electric vehicles and wind turbines. And we've seen how strategic they are. China restricted exports last year in response to US tariffs, sending shockwaves through supply chains. So with a major meeting coming up between President Donald Trump and Chinese leader Xi Jinping, this move is being read as a clear signal. China is tightening control, and it knows exactly how much leverage it holds. For more details, go to mining.com. So Josh, there's a long-standing debate around futures market shorting by large institutions, right? Regulators say there's no systemic manipulation. Where do you stand on that?
Yeah, it's pretty easy to say some of these guys have been sued for the very things you're bringing up. So to say that there is no manipulation ever would be false based on court law. So I'm not one to say that it's happening every single day either. I think we do get glimpses of things, and you also have to imagine these banks, oftentimes they don't necessarily work together, so they're all in profit for themselves. They want their own bonuses, they want their own, they want to control their own destiny. And you've got major players in the past like Carlyle Group that's been involved, and they'll purchase an interest in a gold mine, and they'll say, hey, I'll give you a loan, for example, I'll take some equity, I'll give you a loan against it, but you got to hedge, knowing that if the price goes up, guess what they get to do? They get to own more of the equity at a really favorable rate. you could call that unscrupulous lending takeover, but this is Wall Street. This is what has happened all throughout the world throughout time. So, but over time, I would say is the manipulation gets washed out, and I think we're starting to see silver starting to get some price discovery. A year or two ago, to think that we would be here where we're at today in the 70s sounds insane. Let alone 120. Maybe it got ahead of itself a little bit, but I think over time, it's going to find its own price point, despite the potential of massaging at times from various groups.
There's another very interesting story that's been big in the news in the last week or two, and I want to get your take on this. I mean, reporting about illicit gold entering parts of the global supply chain. Does that ultimately strengthen the case for trusted mints like Scottsdale, or risk undermining confidence in the sector? How did you see that?
Yeah, and I think we're still kind of learning what all they're talking about. I do know most of the refineries, like a lot of the refineries that we work. So we don't buy from mines, we buy from the refineries. So we're doing non-conflict minerals. We're making sure our KYCs, AMLs, and I'd say the companies that we work with are really, really strict. Some people that work in other jurisdictions, let's say Latin America, for example, not all of it is toxic, but it has a higher risk factor. So every company has a different risk factor. Where's that metal coming from? Our vault, the Wyoming Reserve, is actually part of the Exedris platform. We signed up for it before the LBMA did. And so that means we've got the potential of working with mines. What ground did it come from? Where did it go from refining? Processing, was it turned into a government coin or not? And I think at an institutional level, that can bring a lot of trust in terms of you see the circle of trust or where it was. Now, once it leaves the vault and goes out to a consumer, it's no longer tracked and traced. So the consumer who wants privacy doesn't have any issue. But I think what we're finding is, a lot of entities want to know where they're getting their material, and we're partnered with. I'd say one in particular, very large Swiss refinery. We've got a partnership out of Australia with the government, with Perth. And I know everybody gets poked at some point saying, hey, there was something, that came through their feedstock. And I know a lot of that metal coming out of Africa, that's probably some of the most dangerous stuff, goes to Dubai. Most of that stuff is going more into the China, Russia sector for the most part. So I do know, let's say the Western nations try their best to stay away from that stuff.
I want to, as we wrap up, Josh, I want to go back to the model once again, the partnership. I mean, if this model is as compelling as it sounds, what's the biggest barrier stopping, let's say, more companies from doing exactly what Hyperscale is doing?
Probably education as to, how does a physical asset work on my balance sheet? And again, everyone can do accounting differently, but you can mark to market that every single day. And I believe Hyperscale is going to put out a weekly report, just like they put out a weekly report. What is the Bitcoin holdings on this day? They can put out how many ounces of silver we hold on this day. And so I think by taking some transparency and then knowing, hey, what can I do with this? I can trade it. I can loan against it. I can use it as a treasury asset, like the way it has been probably for thousands of years, frankly. So, I mean, this is what has financed wars. Even still to this day, precious metals are pledged to the World Bank for funding of developing nations, stuff like that. So I think probably it's the education. Where do you buy it? Where do you go? We saw it with the state of Wyoming. Their politicians. It took them a couple of years, and I testified over probably about over a 2-year period, and they finally decided, hey, let's go buy physical. They're already up on it quite nicely, and they're looking at a different percentage allocation now. And I actually think some of the states could contend with the Europeans, some of the U.S. states in terms of gold holdings. That's going to be my prediction over the next 5 years, that some of these U.S. states are going to go into the billions of dollars in gold for the same reason we're talking about for corporations, and that may look at their treasury assets. The Fed policy, I think I just put it out on my Twitter X account today. The Fed operates for the continuation of the government entity, but not necessarily the people in it. And I think we've seen this. This is true of every nation, right? Things just get printed. And so a lot of our strife that we're having is is the money's not making sense anymore. And so our purchasing power is going down. Where do you go? And, and frankly, they don't want us to really pay attention to what they're doing. So,
Yeah.
sometimes they tell us what to do, and oftentimes that's not the best plan of action. So I think that's where we're entering. It's a whole new paradigm. I don't feel like gold's a trade anymore. It's a new paradigm that we're entering.
And, as we say goodbye, just a quick one, not to put you on the spot, but I want to get a good sound in terms of where you see silver going in the medium and long term, right? We're sitting around about 72 to 75, around about that dollar range. What's your take on what's going to happen in the next few months?
I'm very bullish over the next number of years. And so you kind of look at, I look at what you would call the potential of a monetary reset, and that could take form in a number of ways. So let's just say this is 2030-ish, give or take a year or two. And, I think you're going to go up quite a bit. For those that maybe knew who Jim Sinclair was, he was in the mining industry. He was really well known. He passed away a few years ago. So I've kind of readopted his ratio and have kind of brought it back to life. And I call it the Phair Sinclair ratio, which is how central banks value the price of gold with the amount of foreign debt that the reserve currency of the world has. And so right now, if you take the foreign debt of the United States and its stated gold holdings, so I'm not even getting into if it's there or not, but the stated gold holdings would say that gold needs to be close to 35,000. Now, I'm not saying it's going to get there tomorrow, but Jim was right in the 70s to 1980, and he was right from 9/11 to 2011. And so I think if you start looking at that, if we extrapolate historical ratios of gold silver, let's just say, about a year ago, silver gold was right around 110 to 1, and and then it dropped really low. So you could use a historical, it comes out of the earth 8 to 1. Really, regardless if gold were to get even half the way there, silver's going to perform incredibly. So it will be volatile. I do see it. This has probably been a healthy year for it to just kind of expand, contract, get massaged, and outside, I feel like the war has kind of dampened the metals, and a lot of the Gulf states have had to sell gold into this, maybe over the counter, maybe not reported, just as a short term liquidity option. But yet at the same time, we just saw a central bank report that I think Q1 was bigger than anything last year. So there's no doubt that I think dips are not going to last. They're not going to last too long. We're going to hear more about the silver price. Is there a floor from the U.S. government? At what price? I've stated where I think it might be on my X account. I could be completely wrong. But I think we're going to learn a lot more in the coming weeks, even as to what does the U.S. mean when it says we're putting in a floor on these critical minerals. So, hey, owning things that you have governments fighting over and printing fake fiat money to buy is a wonderful place to be, and this is maybe one of the better opportunities that's out there in really any sphere where you have so much change coming.
Well, with that, we'll end it there. Listen, it really has been a pleasure talking to you, and really some good insights there. Josh Phair, the founder and CEO of Scottsdale Mint. Thanks very much indeed, Josh, for talking to us.
Great. Thank you. Take care.